Are the bears done being squeezed, and is Powell about to turn the market on its head as early as next week? History shows investors should keep a tight leash on risk once the Fed cuts rates. And we scroll on down, we look at this graph that they have for us. And I want you guys to pay very close attention. It's a little bit misleading, and I'm going to show you why here in a minute. And it basically goes on to say that once the Fed cuts rates, it depends on if the market will be down 3 months later, depends on if there will be a recession or not. You can see July 12th, 1990, 3 months later after the Fed started cutting rates, the market was down 17.9%. Yes, there was a recession. Then July 6th, when the Fed cut rates in 1995, there was no recession. And 3 months later, the market was higher. When the Fed cut rates in September 29, 1998, the market was up 17.6%. 3 months later, and no, we were not in a recession. But when we look at January 3rd, 2001 and September 18th, 2007, the market was down both of those times, and there was a recession that followed. However, here's where this is a little bit misleading. We come over and look at March 2020, the Fed cut rates, and 3 months later, the market was higher. So did a recession follow? The answer was no. I think that's because, one, they redefined what a recession is, and two, when you look at this graph right here, they're saying 3 months later. What about 1 month later? Because we know when the Fed cut rates right here in 2020, the market had a dive of 35%. Every time the Fed goes on an aggressive rate cutting campaign, if they only cut by 25 basis points, no big deal. But the problem is, we come over and look at the Fed watch tool, we can see the Fed is expected to go on an aggressive rate cutting campaign moving forward. So it's not like it's just going to be 25 basis points and that's all she wrote. When we also go come back to this article right here, it's expected a week from today, Federal Reserve Chair Jerome Powell will use his Jackson Hole speech to signal that the central bank is very likely to trim borrowing costs after its policy meeting on September 18th. Now, if you guys listen when Jay Powell spoke during the last FOMC statement, he basically said, we are cutting rates, but I'm not saying we're cutting rates. All right. He tried to dance around it, but he was very clear, right? Regardless of what the inflation data coming out is, Jay Powell is going to be cutting rates. There's nothing to debate about that. Now, we come over this morning, we look at the VIX. The volatility index has been getting crushed, but right now on pre-market, we see the VIX is actually up 17 cents. Are we going to finally start to see a little bit of a pullback? Because this week, the markets have been extremely strong. We come over and look at gold. Gold is trying to firm up. We're trying to push above the candle of indecision yesterday. And again, those of you that haven't been watching the previous videos, we've been talking about this ABC pattern up here about 25.86. Now, in order for that pattern to be validated, we must break above these recent swing highs. But the longer we stay up and around this upper swing point, the more likely this level is going to give way, and we're going to see gold go ahead and push on up. Now we look at crude oil. Crude oil is down in a big way out here this morning. Crude oil is down 4.34%. That's going to be good for us consumers at the pump. However, unfortunately, we're not going to see it reflect out here tomorrow at the pumps. If indeed crude oil stays on this path, one, that'll show that inflation is indeed easing, or it will help inflation ease even more. We come over and look at some of the indices out here. We see the Russell 2000 in pre-market is up a whopping 0.3%. It was only able to fill one of the gaps from last week, where we saw a lot of the other indices fill both of the gaps. Even the Dow was able to fill both of the gaps. Now, yesterday, the Dow closed with what could be a hanging man type of candle. And as the weakest of all reversal patterns, if we start breaking that back down below the low of that candle, watch out, that could be a short-term reversal. And we'll see, does the Dow come and put in a higher low, or do we come all the way back down here? Now, we also got to be real, because this could be a larger ABC pattern down. Now, that would only put us marginally below the lows. And if we map that out, that would go something like this. The A to B leg, the B to C leg is a corrective leg, and that would give the Dow all the way down here towards 379. Then we come over and we look at the QQQs real quick. What do we see? Well, the Qs were able to close both of the gaps from last week. We were able to clear the minus development area. Now we started to come up right to where we had a little bit of volume right here before the next little minus development area within the profile. And this could be an area where we start to see a knee jerk on the way back down. Now, when we start to come back down, it would be interesting to see if the MACD indicator actually shows that we're going to have some type of divergence setting up. We look out here on the 1 hour chart and see that you can see we had back-to-back gaps in the market, and we'll see, do we start working our way down, filling the other gap today? Out here on the 30-minute chart, MACD indicator is starting to pinch together, showing a little bit of signs of weakness. And when we look at this, I gave you guys the volume profile levels in last night's video, but as long as we stay below the point of control, I do want to come down here and try to target value area low at 471.65-ish. and then maybe hold a runner down towards gap support, or even all the way down here towards the gap being filled. We'll see if indeed it does shake out that way this morning. We look at the economic calendar, and here at 8:30 a.m., we're going to have building permits come out, housing starts come out. Then at 10 a.m., we have preliminary consumer sentiment, followed by inflation expectation. FOMC member Goldsby will be speaking at 1:25. I want to make everybody aware, Apex having a 71% sale off all their valuation accounts, past in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. So when we come over and we look at the futures markets real quick, we look over here at the NASDAQ. Notice we talked about this area yesterday, about the market coming up, hitting the top of this big 4-hour candle that we had on the way down that really kicked off all that selling that we saw. Well, we came right back up to the scene of the crime, and now we're starting to get a rejection down. We're on our second down candle. Now, how low could we potentially go? And when we look at this, the next structure breakout point was really all the way down here towards about 19,220. Last night during the live stream, when we looked at the NASDAQ, we had quite a large level. Now we have one down here at 450, but this level is still here from last night. We have quite a bit of contracts sitting down here at 19,350 on the S&P 500. Now, if you guys didn't know, I do stream live Monday through Thursday at 8:45 p.m. If you'd like to join me, it's very simple. Hit the subscribe button down below and make sure you have the bell notifications turned on for all. But if we look right here and see where 350 is on this chart, that would bring us to about right here on the chart. And you can see that comes in where the next high volume area is on the composite profile. Then when we look out here on the daily chart, let's see, 350 kind of lines up with the middle of this distribution area right here on the daily profile as well. So let's see, does the market continue to slide down towards that level or not today? I think we're going to get our answer here in just a bit. Now, the market has been on one heck of a tear. I mean, this has been, market goes up, consolidate, boom, big rocket ship on the way up. And we'll start to see if we start to, come back down here just a bit. Now, the overnight volume profile levels are going to be key. If we stay below value area low, I'll be looking for lower prices. Some of those targets we talked about. You can also look to pick off any of these high volume areas on the composite profile. Now, I also want to mention, we do have a minus development area right down here on the profile that has my attention as well. And that goes anywhere from 19,221 to about 19,277. So if things really get ugly out there, look for the market to come down towards that area. I am expecting more of a D-shaped profile, meaning we probe a little bit higher, which we did overnight. We probe a little bit lower, which we're doing right now, and then just kind of jostle back and forth throughout the day. Keep in mind, today is option expiration. It's the third Friday of the month. So with that, it's not uncommon to see a lot of back and forth in the market. Or will OPEX be enough to shift the sentiment in the market? And speaking of the sentiment in the market, I have a quick question for you guys. Where do you guys think we're at on this graph? Are we still in the thrill stage or euphoria stage? Or are we in the complacency stage? This is more likely where I think the market is right now. We're in the complacency stage. This is what's going to unfold next. Anxiety, denial, panic, and then we can look to buy it back on the way back up. Let me know in the comment section down below, what stage of this cycle do you think we're currently in? Now, when we come over and we look at the SPY real quick, what do we see? The SPY is down $1.03. And this will produce a small gap on the way down if indeed the market opens anywhere where it is right now. Keep in mind, we do have a high volume area on the composite profile, which is also right near that gap from yesterday. So we want to pay very close attention to that just in case all hell breaks loose today in the markets. We look out here on the daily chart, MACD indicator is starting to get a roll effect. We'll see if it starts to cross to the downside. On the 30-minute chart, you can see the MACD indicator is already pinched together. That is a warning sign. Watch out. Maybe some of the momentum is starting to wane from these upper levels. Now, today, if we stay below the point of control, I do want to focus on trying to target near this value area low, anywhere from 551 up towards the top of this little minus development area to about 551.47. We breached that. Then I'm looking for a retest of the lows from yesterday, aka gap support. Then I'd want to hold a runner all the way down here, see if we can fill the gap. Now, if you're really feeling froggy and you want to hold for multiple days, maybe we can come all the way back down, filling the other gap from this week. We come over and look at the futures markets. Notice we're starting to get that turn effect. One of the areas I do want to focus on, actually two of them, is going to be this high volume node right here. Now that area is going to come in at a price point of 55.31. The next area I want to focus on is we have a minus development area within the weekly profile as well. Now I'm going to zoom this up a little bit just so we can see it. I'm going to go ahead, I'm going to mark this off on my chart. Now that minus development area really comes in anywhere from a ballpark from about 55.06 down here to about 54.93. This could be an area of attraction for the market. And you can see this has just been a chugga. Will Friday undo some of this move? Now, I don't think we're coming all the way down near the lows, especially today, but this area down here would be very juicy. That would actually imply that the S&P 500 could drop another 50 points from the current level. We look out here on the 30-minute volume profile levels, and keep in mind, we have that minus development area right down here. Now, this is the same area that we identified on the weekly profile as well. Now, when we look, all right, one thing to note, as long as we're below either the overnight value area low or the point of control, I want to stay on the sell side of the markets. Some of the areas I would want to watch would be this minus development area right here for a potential bounce, which is going to come in about 55.48. The next area would be down here towards about 55.41. Now, if I go ahead and pull up Bookmap right here, you can see we have a decent amount of orders coming in at 55.34. Let's see if 55.34 lines up with anything on the chart. If we go ahead and we map this out, that actually put us this little minus development area here. This isn't as good as I would like. That would be a little bit below value area low. So let's see, can we make it down towards that level today or not? All right, we got our first round of economic data at 8:30. Building permits came in at 1.4 million. Forecasted 1.43, previously 1.45. Yikes, sounds like a slowdown to me. Housing starts 1.24 versus a forecast of 1.34, previously 1.33. Another sign of a slowdown in the market. And we're going to see what that news presents here at 10 a.m. this morning. When we come over and look at the overnight volume profile levels, you can see we've melted off here quite a bit. We've had an overnight range now of 234 points on the NASDAQ. Value area low is going to come in at 19,570.25. The point of control will come in at 19,633.25. Value area high will be 19,664.75. Now, notice we had quite a large order sitting right there at 450 that I shared with you guys earlier in this video on Bookmap. The second large order is down here around 350. So do we get a bounce from this area back up? And if so, do we come back up and essentially test value area low and then roll back over? Keep in mind, the path to least resistance is lower as long as we're below value area low. However, I want to put a little twist on this. If we break below 19,403, then we start to come back up. I would then want to shift from being sell side of the market to then being back on the buy side of the market. Keep in mind, one of the targets I have is, along with value area low from yesterday, would also be this minus development area on the profile. Come over here and look at the S&P 500. You can see it's just melting on down. Value area high comes in at 5582.25. The point of control will be 5573.75. Value area low coming at 5562.25. Now, when we look at this, we're going to have a gap out here this morning. Does the market try to rally back up and fill the gap, or do we continue to melt down? That's going to be the million-dollar question. Also, the top of this large candle that we saw yesterday could be a target point for the market to come back towards, which comes in at 5527.75. So as long as we are below value area low from the overnight, I want to stay on the sell side of the market. How low can we potentially go in this market? That's going to be my MO for today. When we come over and look at the daily profiles, notice we're almost right here at value area low right now. We had that large order sitting right there at 55.34. What was the low? 55.36. We'll see if we come down there and tag it, or does that large order that's sitting there, does that scare the market and we actually start to bounce on the way back up? Now, if you guys like to learn how to identify absorption in the market using two different order flow techniques, watch this video right here.